Grandest of the old school, the Savoy Hotel in the Strand. It opened its doors in 1889, and Marilyn Monroe, Charlie Chaplin, presidents and princes have all stayed there. The Savoy's location on a quiet corner on the banks of the Thames makes it one of the capital's prime hotels. But it's been shut for a makeover since 2007. It finally reopens in October, 18 months later than planned.
A lot of things went wrong, and it's an old building, and what goes with a long building in terms of its condition is never truly understood until you start peeling away the layers. It's clearly a lot more than was originally envisaged.
The refurb cost around $340 million. Fortunately, the Savoy's owner, the Saudi Prince Al Walid bin Talal, has deep pockets.
I think under private ownership of who we've had, who have been extremely supportive, we're in a very fortunate position in terms of them staying the course. Had we been in a different situation, it might likely have been much more difficult.
The Royal Suite costs $15,000 a night, and even though the Savoy isn't even open yet, it's already taken reservations for it. And indeed, the entire hotel is sold out for the first night. Also out of service for the past 2 years was the Four Seasons Hotel in Park Lane, again getting major renovations like the Savoy. Prince Al Walid bin Talal owns a substantial stake in it as well. Together, these two top hotels account for 13% of luxury rooms in the city.
It's not just those hotels reopening, it's other luxury hotels coming on stream. Corinthia are opening in Northumberland Avenue in 2011, another 300 rooms. That's an additional 8%. There will be the thick end of 20% additional rooms on board. That will require quite a bit of recovery. It will take much longer than most people imagine.
Corinthia is more optimistic. It's spending $420 million on its first London flagship property, an old Ministry of Defence building, originally an hotel by the same architect that designed the Savoy and on the same stretch of river.
We were able to secure what we believe was one of the most attractive hotel sites in London. These opportunities very rarely come along, and we were part of many people that bid to buy this site. Competition is always good, particularly at this top level of the market. If you're competing as one of the top 5 hotels in London, your clients are going to be wanting to see what you deliver.
The Corinthia London is due to open in spring 2011. And even at a time of tight credit, this high-profile project was able to secure half its finance from Barclays Bank.
They've believed in the location and the desire that we have to create this hotel, and also that it's in a very strong market. I think they saw the opportunity, and they're able to see what we were going to create in terms of value for the long term.
Which represents something of a shift in attitudes, as high-end hotels have not traditionally been attractive to investors.
The hotel industry itself has been something of a backwater in terms of property investment. In terms of commercial property, hotels represent globally something like 5% of the markets.
Quite frankly, big capital has not been particularly strongly attracted to hotels.
Now it is a much more hard-nosed transaction. What's the return going to be? And I think one of the things that they've begun to understand is, particularly with a highly cyclical asset like a luxury hotel, you've got to be in it for the long term.
There has been talk that Chinese investors are interested in buying prime hotel properties in London, and that travellers from the East are going to be part of a tourist boom in London in the future. But this could be more a case of wishful thinking.
It's one of these situations which I think often can be over-regged, at least in the short term. I think it's going to be a profound change, and we're seeing a profound shift in terms of global economics. We're seeing a shift of power from the West to the East. But the typical thing is it's going to take twice as long as people expect.
There will be growth. Absolutely. There will be strong growth. But some commentators of the market have become a little florid about it.
London, though, looks very attractive whether you are an investor or a traveller, as one of the effects of the UK's recession, sterling's decline, has resulted in somewhat of a silver lining for the London luxury hotel market.
If you look how the pound sits against the euro, so effectively the rates are off 25% on what they were a couple of years ago. It actually looks quite good value coming to London right now.
Another boost for the capital, the London 2012 Olympics. Although the Games themselves are only 3 weeks long, the effects last beyond that and start earlier.
We've had huge levels of interest for people that want to book accommodation for 2012, but also more importantly, people coming to London in 2011 to start to make their plans.
So, as South Africa got a boost during the recession from football's World Cup, luxury hotel owners in London are hoping that the 2012 Olympic Games will bring them the gold.